Hi, I'm Richard Wyra. Let's talk about term life insurance. Term life insurance is offered by most life insurance companies. And there's a little confusion about how the product works. Allow me to explain. When you buy term life insurance, you're buying it for a period of time. You're buying it for a block of 10 years, 20 years, 30 years. You pay a low level premium for that period of time. But when that block ends, 20 years down the road, you have no life insurance coverage. So the premiums, even though they're low that you've been paying into it, they're buying pure death benefit, and it's allowing you to have a lot of financial security, a lot of family security for a very low price for a specific number of years. A lot of families will look into term life insurance when their children are 3 and 4 years old, thinking they'll buy a policy for 20 years. That way the children can get through school in case something happens to mom or dad. And unfortunately, it does. Life insurance is not for the people who die. It's for the people who live. Term life insurance allows you to do two things: to buy a large amount of life insurance, a large amount of coverage for a very small price. Some companies even offer what's called return of premium, and that is for an added price. It guarantees you that at the end of the 10 years or 20 years or 30 years, you get 100% of every dollar you paid into it back to you. So it's no-cost life insurance. After 20 years, you're still alive, you get 100% of your money back. It's a great concept. The other thing with term life insurance, and it's found in all life insurance policies, is a special provision now that says you don't have to die to collect. It's called a critical illness benefit at no cost to you. The insurance company has thrown this in. It's an interesting concept. If your doctor says you have 12 months or less to live, the insurance company will pay out 50% of that death benefit to you in the form of a living benefit to help you with your final expenses, additional medical cost, a family vacation. Upon death, the balance of that face amount is paid to your family. So in other words, if you had a $500,000 policy and your doctor says, I'm sorry, but you have cancer, it's progressing, and as long as he writes a report saying he believes you have 12 months or less to live, the insurance company will write a check to you for $250,000. If you live, and I know clients who have lived for 5, 6, 8 years after being diagnosed with terminal cancer, the insurance company never asked you for that money back. They just deduct it from the policy when you die. It's a great benefit, and if you're looking at term insurance or universal life, please check to make sure that your policy has that provision.